Imagine a vast, untapped territory. It holds immense resources. It has no roads, no power, and no laws. The cost to enter is high, and the risks are enormous. But for those who get in early, the rewards could be generational. This was the story of frontier markets on Earth, like China in the 1990s. Today, this story is being written again. Not across an ocean, but across the void of space. The moon, a silent gray orb in our night sky, is emerging as the ultimate frontier market. It presents a challenge of a scale we have never seen before, yet its economic logic is surprisingly familiar. The comparison to China in the 1990s is not just a poetic one. It is a functional analogy. Back then, China possessed a massive potential workforce, untapped consumer demand, but it lacked the modern infrastructure to unlock it. The same is true for the moon. The first question any investor asks about a new market is about its size. What is the total addressable market? For the moon, the numbers are astronomical, yet grounded in scientific analysis. A comprehensive study by McKinsey and Company, among others, has placed the potential value of lunar resources at an estimated $26 trillion. This figure comes from careful analysis of the moon's known and inferred composition. It is roughly equivalent to the annual economic output of the United States. This transforms the moon from scientific curiosity into a strategic economic asset. This value is distributed across several key resources. The most obvious is water in the form of ice, in permanently shadowed polar craters. Water can be split into hydrogen and oxygen, which can provide breathable air and the primary components for rocket propellant. A lunar refueling station would dramatically lower the cost of missions to Mars and beyond, making the moon a critical logistical hub for the solar system. Beyond water, the regolith is rich in silicon, aluminum, iron, and titanium, essential for on-site manufacturing and construction, avoiding Earth launch costs. The moon is also a source of helium-3, a potential fuel for future fusion. $26 trillion is more than double China's GDP, a reservoir of value driving a new space race. The lunar economy does not exist in a vacuum. It is the next logical frontier for a broader global space economy. That economy is already experiencing explosive growth. In 2023, space was valued at roughly $630 billion. Satellites, launch services, GPS navigation, and climate monitoring. This is only the beginning. Leading forecasts project near tripling to $1.8 trillion by 2035. This rapid expansion signals sector vitality. It mirrors industrialization patterns on Earth. As technologies mature and costs fall, new businesses flood in, creating a dynamic cycle. SpaceX-style cost reductions catalyze everything downstream. Lower launch costs unlock more ambitious missions and services. The next phase shifts activity into cislunar space. Expect new categories like resource extraction, propellant production, in-space manufacturing, habitat construction, power generation, and logistical services. These will drive robotics, telecom, life support, and medical needs. Ripple effects from this include engineering, software, and advanced manufacturing jobs on Earth. For all its promise, the moon presents one colossal obstacle: a complete and total lack of infrastructure. There are no landing pads, no roads, no power grids, no communication relays, no fuel depots. Every mission must carry everything from Earth. That's incredibly expensive and inefficient. It's the single greatest barrier to a sustainable lunar economy. Economists call this an infrastructure gap, but on a scale never before encountered. On Earth, gaps slow growth. Without roads or ports, goods can't reach markets. Without reliable power, factories can't operate. Foundational builds cost too much, with slow ROI, for a single firm. Single launches can run $100 million to over $1 billion, and dozens of launches are needed even for basics. The upfront capital crushes margins. It's a technical and economic deadlock. Private enterprise can't solve it alone. When private markets face a deadlock, history shows the state can and must play a pivotal role. Governments can make large-scale, long-term investments too risky for private capital. They act as the investor of first resort, creating the conditions for markets to emerge. Space agencies are now playing this role for the lunar economy, not just science but strategic anchor investments to de-risk and create markets. Through commercial lunar payload services like SpaceX, Blue Origin, Draper, and others. NASA buys delivery services from private companies, giving firms revenue and flight heritage. The company, Intuitive Machines, holds contracts with potential value up to $5 billion over 10 years, a powerful catalyst to build capabilities for broader customers. NASA also funds critical infrastructure technologies. Public agencies absorb initial risk to unlock commercial activity. The state becomes a stable, predictable, pioneering customer, which are the first drops of rain that signal a coming ecosystem. Public spending on infrastructure is not merely an expense, it is an investment with a powerful return. Economists call this the multiplier effect. About $1 of public spend yields $1.50 of private GDP growth on average. Foundational projects unlock outsized private activity. As applicable to the moon as any country, highways create incomes and jobs. Supply chains come alive and ecosystems emerge around infrastructure. On the moon, the dynamic is identical. A public-funded power station is the highway. It enables mining, research, and communications. NASA pays a lander company and revenue and heritage follow. Hiring, supply chains, and new tech bloom are the result. Others see a path and build complementary services. It's important to evaluate cost by the activity it unlocks. Set the standards, control access, charge fees. On the moon, duplication is prohibitively expensive early on. Consider the first operational pad at the South Pole. Future missions will prefer safety and efficiency over risky terrain. The owner of specific infrastructure can charge significant fees. Power owners gain customers across operations. First to offer lunar propellant becomes the go-to refuel node. Returns include direct fees and strategic ecosystem control. Access terms shape which players can operate. This is an economic moat. The race is to build the toll booths, not just to arrive. Firms are designing power systems, relays, and landing facilities. Nations are establishing legal frameworks to enable ownership and operation. Competition is fierce because the stakes are high. Winners won't just participate, they'll be landlords for decades to come.